China is giving the floor to say metaphorically to the West, and that is what has caused this sense of surprise. But no one really has a precise explanation to the reasons behind this decision.
In terms of what we are seeing from the Europeans, the French President Emmanuel Macron set to kick off the conference. What can we expect to hear from him?
One speech this evening happens against the backdrop of two big trends. The first is this global tariffs that the United States has directed in Europe, in Asia, and particularly in Southeast Asia. The second is Russia's war against Ukraine is now into its fourth year. The relationship between Russia and China is getting deeper and deeper. We see Chinese technologies enabling Russia's war, and so speech, these two intersecting trends, let's say, and his main message will be that Europe is a continent that countries in the Pacific they can rely on. Europe lies in terms of respecting the rules of trade, not just of trade, the rules of principles of security, business too. It's increasingly important when those rules are being the United States.
We'll look forward to that speech later on and the coverage that's going to come from there. Alberto Nardelli joining us ahead of that speech by the French President. Coming up, we're going to talk about another legal case, this time involving Google. We're getting to the remedy phase in terms of dealing with potentially Google's dominance. We're heading to the final arguments. Where are we forward? We'll look at how the case has developed and what is changing. That's coming up next. This is Bloomberg. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Really trying to integrate it's also you're not supposed to be intimidated by the house guy.
US corporate news launching shares have started pre-market trading this week for the company into the tariff impact. Just $300 billion, and weakness in its smaller brands such as the Republic. The US retailers Old Navy and Gap brands rebounded though on refreshed product lines and saw comparable store sales rising in the first quarter. One story coming out of Gap. Citadel, which certainly had a much more positive picture overnight, it's given a very strong profit outlook for the year, way above what Wall Street actually had been looking for. The company says AI sales demand is unprecedented with more than $12 billion in orders this quarter alone. Just to put that in context, that exceeds the number of shipments that we saw for the entire fiscal year last year, but it's one quarter versus the entire year. Dell says the AI market is exciting, but also lumpy with a highly complex supply chain. I think we're all beginning to understand that a little bit more. Let's turn to another US corporate watching carefully. Google and the US Department of Justice are slated to offer closing arguments today in an antitrust case that caps a busy spring for litigation of size at the big tech, basically. Charlie Wells is here with the latest. Let's talk about this antitrust case. Where are we in this case? What are we about to find out?
So the pressure is mounting on Google. We are now at a point where Google has twice in less than a year been found to have monopolized a key part of the internet. So in one case, search, in another that was ad tech. So today, in just a few hours, we are going to hear these closing arguments in the remedy phase of the search trial, where a judge will try to determine what should happen to rectify this monopolization. So the Department of Justice has been aggressively pushing for Google to have to spin out that Google Chrome web browser. Google has shot back. Sundar Pichai, the CEO of Alphabet, has, basically said there could be unintended consequences of a move like this. There's been talk of innovation and not potentially stifling innovation. But what is making this more of a potentially looking remedy phase is the fact that the judge has been asking a lot of questions about AI and the implications for AI. And the thinking here is that if these search giants have dominance in search, they could potentially use their sides to keep it as AI technology develops.
Okay, so let's talk about the importance of this case. Is this a shift in antitrust versus the company antitrust story around big tech? Is this a backward-looking story that we therefore don't need to worry about if it's forward-looking about AI and backward-looking about search? Just kind of put some context for me.
Right, one of the surprises of Trump 2.0 has been this continuation of these antitrust cases. So there's not just Google here, there is also the FTC case against Meta. That wrapped just this week, and we had dramatic testimony from Mark Zuckerberg, by Sheryl Sandberg. We also had the DOJ this spring suing Apple, and this is an area where volume really matters because there is judicial dialogue, whether it is explicit or not. We know that there can be kind of dialogue between they're watching each other, not just on this side of the Atlantic, also in Europe, because there we have a new competition commissioner who, under her tenure, we've already seen fines against some of these big tech companies. She has talked about potential remedy for monopolization being the potential divestiture from some of these big tech firms. So certainly an area where volume matters and where these regulators are watching each other.
Let's get down to it. Is Google about to be broken?
I mean, that's the question that everyone cares about. And look, history is not on the side of these regulators. They have successfully managed to split up a big U.S. company since 1982 with AT&T. We all remember that 1998 case against Microsoft, ultimately unsuccessful. And I think this drives home that point that antitrust breaking up is hard to do.
Breaking up is not to do, Charlie. Let's live by this weekend. Charlie Wells, thank you very much indeed. That's the corporate story. Let's talk about the macro story. The data out. We're going to be watching the exits today. US data includes PCE, personal income and spending. Let's talk about all of this and the importance of this data. Rich Levels, Bloomberg senior editor on the EMEA News Desk, joining me around the table. Importance of PCE data. How important is this in context of everything else that is happening?
Be regarded as quite important. Let's remember that this is sort of the inflation gauge that the Fed tends to look at. And as we were looking at kind of Fed minutes earlier in the week, we saw inflation was very much something that they are watching. And we're kind of looking at what to expect from today's print. It does seem like that is going to be relatively flat. We're going to see a sort of slight decrease year on year, slight increase month on month. So relatively flat, all else considered. But I think that we're looking at some of the components of that. We are expecting to see goods prices increasing. So when you think about that in the perspective of tariffs and how those kind of ripple through, do those increase inflationary pressures? I think that's going to be something that the market is watching.
It's the consumer spending. What is happening with confidence at the moment? And is this going to be giving us some indicator as to that? I saw some data a few days ago, whose consumer confidence bounced back very strongly. Are we going to see a reflection of that here? What is it going to tell us about the overall strength of the consumer, the big, huge part that it plays in the US economy?
I mean, it is an incredibly important part for the US economy. And I think that is one of those things that we'll be watching very closely, the impact of tariffs. And I think this week is kind of a good in case of point, to see this uncertainty in tariffs that really does have an impact on the consumer. If you have tariffs in place, you can plan accordingly. If you know there are not going to be tariffs in place, you can plan accordingly. But it's kind of moving back and forward, whether it's sort of the Trump administration flexible on its own tariffs, as we've seen it in previous weeks and months, or whether it's kind of imposed halts or then releases as an appeal going forward. You really sort of make certain plans as a result of that. That's obviously not going to be in today's data, but I think that's going to be something that people are looking for kind of going forward, and maybe the people discount a little bit.
So here's the data. Current data important in as much as we've got so many other big things moving around it, but you can look at the data and go, well, it could be this, or it could be that, or there could be other factors that means something.
It's a great question, and I think we have the kind of tariff certainty. It's sort of hard to say when it would be, but I think the market will latch onto the data that helps prove its own story. And we saw that kind of yesterday, right, with the second print of GDP. It wasn't actually as bad as the first print, and yet we saw bonds rallying as though the Fed was going to have to cut rates more aggressively. They just said a couple of days earlier via the Fed minutes that they weren't really inclined to cut, but they were on wait and see mode. So I think you're kind of going to see sort of the market taking what it wants from this, because they want to see some signs that inflation picture is kind of, muted and okay, and maybe the Fed can cut. Maybe you'll see that come through even regardless of what the PCE data shows. But I think, there is that kind of lingering concern in the background, particularly for bond investors, around the fiscal picture. And that's kind of the piece that, the data tells you what the Fed might do. The tariff sort of gives you a kind of sense as to some of that trade. But the fiscal picture is really around kind of, sort of the bill that's going through Congress and what that will mean for the US's debt sustainability.
Does the fiscal story matter for the bond market and the tariff story matter for the equity market? I'm trying to think about how you kind of different bodies seem to be reacting to different things. Different people are telling which is the fiscal more important? Is the trade data more important? For you guys, it seems to be the trade. With the bond market, people, it seems to be maybe it's actually the fiscal story.
I talked to you a lot about kind of just the makeup of those different markets. Bond investors are inherently pessimistic. They're looking to get repaid. So they're looking at kind of the negative picture on what's getting paid in the future. And that could be the fiscal picture and whether kind of the US's debt position is sustainable. So the equity guys, they're looking more at kind of like the health of the economy. Much more of a kind of impact on sort of some of those earnings potential for coming quarters. So I think that's kind of why you sort of see that disconnect between those two markets.
Thank you very much. Setting us up for the rest of the day and what's going to happen in the United States. No, the picture is going to be like that. You don't think an idea of what it look like, what wage costs look like, how much costs it look like. I'm going to answer those questions because the IATA annual general meeting is taking place in Delhi Sunday, Monday, Tuesday next week. I'm going to be there. And Bastian's going to be joining me. CEO of the world's biggest airline, Delta. We've got IAG, we've got Pegasus, we've got Air Canada, we've got Air France. We've got a whole range of airlines here that are going to be joining us. You've got us there. It's going to be a great conversation. We're looking forward to this.
Investors, top executives, global interfaces, totally depth investing. The biggest mistake is on the base.
Miss Linda, I don't think it's my dream alone. I think it's a dream of 1.4 billion Indians to see Olympics being held in India. I think once what takes the transformation you see, not only in the lives of the youth, but in the economy of a country. India is one of the biggest for digital usage. And viewership of the Olympic channel comes from India. So India as a sporting market is huge.
Yes. So getting way faster now, getting.
So when we're talking about innovation and sustainability, I think this is always for including the Olympics. It is sustainable. One forget those things. So I think it has to be
Russian companies heading to kind of get that's a different story. Players are shipping have that earnings reports are going to get funded.
They're not buying to selling. Middle East and Africa, vibrant resources and highly yield investment opportunities abound. Join me on Horizon Middle East and Africa with the stories, newsmakers, and insights to the exciting region. Now we say, Leon Bloomberg. Good morning from our global headquarters in New York City. I'm Danny Berger. Welcome to Bloomberg Brief at your agenda. And tariff dial gets turned up again. A federal appeals court blocks a ruling that had put President Trump's tariffs on hold. Meanwhile, following talks, Treasury Secretary Scott Bessent says trade negotiations between the U.S. and China are slowing. And President Trump's proposal on a tax bill arms Wall Street with increased tax rates for foreign investors. We have made it to Friday. You've made it to the last trading day of the month. We are on track for the best month since November. It's softer this morning. Doesn't help. We're going to get some of those month-end rebalancing trades, mostly out of equities and deposits. To that note, one of the worst big liquidity flows for this year. That's according to the latest Bank of America survey. So we're soft on this morning, down by about 1% for the S&P and Nasdaq. It was a rally yesterday. Weaker economic data certainly didn't help. At least it did help the bond market. At the same time, the solid auction. We take a pause in that. We're higher by about 1.5 basis points on your 10-year yield, trading at 14.43 this morning. It's stocks that are with that is Joe. Joe.
Right, Danny, so one sector looking really red today is retail in particular. Down 15% in the pre-market this morning, and also American edging lower as well. Gap mixed on its earnings, and also a bit of disappointment around the impact of tariffs. The company Banana Republic, I'm told, is the big one there, and as I say, we're adding to the negativity in that space today. This one stood out to me really shortly. The drug that they've produced with the French company, so nothing to treat motors it was supposed to be general stock down 12%, so nothing down on the. Then finally, back in the beauty and cosmetic space, it's a beauty. This one should be expected. Share on the country, bit of an expert in cosmetics following the story yesterday. Danny Lowen, edging higher, and as usual, with this I was gonna say, Joe, cheating stocks. Thank you so much. We'll catch up with you later in the hour. In adjustment to focus, we'll also speak with Wayne BlackRock, who will give us the market latest as tariff developments continue on. And later, Cedar from State Street will be joining as the guest host. Now, it's been quite the month. A lot of back and forth on tariffs, even in just the past week. You'd be surprised if I told you that this is the best month for the S&P 500 since November of 2023. There you go. We're higher by 6%. It's also the first monthly gain after 3 months of declines. Joining us now is Wei Li, Chief Investment Strategist at BlackRock. I'm asking, with all the volatility, would you be a buyer at these levels? Looking at valuations for the S&P, something around 21 times.
Hey there, good morning, happy Friday, thanks for having me. As you know, Danny, we have been overweight US equities was clear that there were constraints shaping policy making and shaping kind of the negotiations on tariffs. That's immediately after the April 9th post 90 days. So our framing of navigating this period of uncertainty seems to be holding this. Number one, do not try to predict the next steps making. That is impossible. Do not try to predict the next headlines. That is impossible. Number two, really focus on immutable laws that we know will have to hold, even at times like this, that can govern concrete progress. They can change how status include US debt arithmetic, how that sits alongside the attempt to close trade deficit. Another immutable is around how quickly we can unwind global supply chain that took decades to build. And because we have these immutable laws governing our framework of risk taking, even the policy is very certain, uncertainty is very elevated, we were able to see results through this group predictable policy making.
That's really interesting one, and it's a very long-term one, and it's hard to wrap your head around. The U.S. trade balance is reshaped if less people come into the U.S. because maybe they're attracted to it. The U.S. tries to ring fence around its own businesses. How are you thinking about the long term? What this ends up looking like?
The longer term is highly uncertain. That's stating the obvious, but the less obvious thing to say is that there is a limit to how things change near term. So the one that we start from is that supply chains cannot be confined one day to the next without grave consequences, not just what it means for inflation, but what it means for having things on the shelf, having critical access to critical goods, which is why we were able to deploy risk, even though it was looking highly uncertain in terms of where global supply chain could be heading towards in the future. One thing I would say though, because of this frame of longer term, highly uncertain, near term, there's a limit to how quickly things can change from status quo. This is actually one of the best investment / trading environment our investors are telling me that they are enjoying. Markets can get carried away with the narrative from one day to the next. Some days we're talking about tariffs really upending decades of global order. On other days, we have reports that makes people believe, or markets believe, that maybe we're going back to where things were. The reality is likely going to be somewhere in the middle. And if markets get carried away with one narrative to the extreme, that's the moment that we can say, here, look at strategies that have worked, active strategies that have worked. We don't know where things are going to head towards in the long term, but there is limit to how quickly things can change. In the near term, reversal strategy, fading extreme pricing has been a good strategy that allow our investors to really take advantage of this really good investing and trading environment.
That's so interesting that it's been a good environment, because I don't know how fun it's been to trade in it, but it certainly has given opportunities. What about international investors? Especially a lot of attention being paid yesterday and this morning to Section 899 of the Big Beautiful Bill, which could impose taxes to foreign investors in the U.S. This idea being that gives yet another reason for capital maybe to stay at home if you are looking at moving it into the U.S. BlackRock clients are against parking money in the United States and American assets.
I would say there has been some repricing of American assets, in particular, term premium for US treasuries and the dollar. And I think we need to normalize the normalization repricing. What is not always term premium in the US stay in a negative territory for such a long time? What is not always how strong dollar has been versus fundamentals such as rate differentials. So in the past, we have seen premium at 1%, 1.5%, without international investor community questioning the safe haven status of the dollar or of treasuries. In the past, we have seen dollar rate and derating to the tune of 20-25% without international community questioning the reserve status of the dollar. I think we really need to kind of differentiate the sensational headline of the US status of safe haven and reserve currency challenged at the end of US exceptionalism. We need to differentiate what's happening from that and also this fundamental rating which we have been saying for a while that the premium needs to go higher to reflect the fiscal reality of the US debt. The last thing I would say, what's going on in terms of the ruling and uncertainty around tariffs, it has been talked about as something they adding to uncertainty, but is it really adding to uncertainty if the counterfactual is not having legal constraints on chaotic negotiations, right? So what we're learning is that there could be additional constraints, and these constraints may not survive, and there may be ways around them, but perhaps it's not uncertainty, it's checks and balances and potential constraints playing out. Having that in mind and having a clear framework of how to take risks at times of uncertainty is what we are focusing on right now in terms of portfolio position.
Great, so fascinating. Thank you so much for spending your Friday morning with us. We always appreciate it. Whaley of BlackRock. Now let's get you some other top stories that are trending on the journal this morning. A Bloomberg survey sees the ECB lowering interest rates 2 more times this year. Respondents predicted 4 reductions in June and September meetings. Economists who were surveyed did warn that the central bank should wait too long. It could signal that the easing campaign is over. The Trump administration's move to revoke visas for Chinese students is causing many to rethink education options. A Shanghai-based consultancy says at least 30% of clients have canceled plans to study in the U.S. or are applying to countries like Australia and Singapore instead. Now, watch enthusiasts have snapped up used Rolex and Patek Philippe timepieces at the end of April. Watch dealers have dial sold 160% higher than normal trading spike to people receive their paychecks. It's far above the average 112% of experience on the other past days of paydays past year. Now, coming up, Treasury Secretary Bessent calls for a Trump-Xi call. More on the latest trade negotiations and what's stuff like that's coming up next.
From the magazine that's the global product friends, James own first economy,
See hot topic conversation.
First to break the numbers.
First off,
There's a lot to talk about here. What is
It has been an
really good about the shared
continuing over context?
that people install ways that we will be talking with them in the next few weeks. And I believe we may at some point have a call between the president and party chair.
speaking there. Now with his on tensions in China, Bloomberg executive editor for Greater China joins us this evening. For him this morning, for us, John, thank you so much for joining us. What do we think it means that trade talks stalled?
3 weeks. Geneva paused on it. It was more than a lot of people were expecting. I think it's bar really high. And as a result, people were expecting quick shuttle back and forth, change all the time, Chinese delegations going to DC, American delegations going to Beijing, and none of that has happened. I think that is actually the reality of trade talks. They're very complicated. The stakes are extremely high. Maybe Secretary talking about cracking down on Chinese so losing other countries more difficult for Chinese they are not dealing.
John, we had another circumstance where the White House was saying that talks were stolen, or at least it was from the EU. In response to that, Trump threatened 50% tariffs and then walked it back. But here we have another circumstance of talks stalling. But that threat isn't. Do you have any understanding as to why the way that China is different than its trading partner?
Well, I think in the example of the EU, tariff threat. President Trump, she are not going to have they know they have a deal on the table, and both sides have made it. They're ready to sign. It's extremely unlikely that she.
Meanwhile, we have the U.S. court system to invalidate IEPA and that are filing the brief. How does that change China's knowing that there's been a lot of court system and Trump's tariffs?
I think it just adds to the U.S. And as long as these questions are in the courts, as long as pretty under tariffs, he's going to want to wait and try to hold on as far as can get.
We'll see if brings anything new. John, thank you so much for joining us. As always, John Liu. One measure in President Trump's boost tax bill. Next, on our capital flight, this is Bloomberg.
Exactly. Well, I think it's the overall enterprising. That's
Okay, I'm not sure. I'm going to try it. And push up. And that was not so, you know, I sort of expect that I had a kind of choice. Like, there wasn't so the same thing. So I didn't to that I was and then I'm not from when I first heard it, I like the idea.
Transform India, the design for Indian women as now. They're not only working class livings, they are redefining now whether it is in sport, whether it's in medicine, whether it's in creative arts, everywhere. And it's positive energy that comes back to me when I'm looking at Indian women. And I just think world that is an now it's quite imagine once education, sports, we empower not only to India but to the planet and the world. Now that you coverage and numbers. And there's analysis. It's your burger in New York on this Friday. Let's take a look at what is on the front pages and headlines around the week. Journal reporting that President Trump's trade team is working for tariffs. Administration is said to be considering a stopgap measure, which includes language for allowing tariffs of up to 15% for businesses really uncertain particularly hard on industries that place orders for entire seasons ahead of time. Now, most suggesting that lower tariffs are beneficial. Court's ruling and its appealed by Trump administration, they're just throwing their plan into further chaos. And on the Washington Post, experts pointing out that Make America Healthy Again, a report that had citations from research done through AI. This had resulted in numerous garbled scientific references and invented studies. Of the 522 footnotes of scientific research in a report sent to the Washington Post, at least 37 appear multiple times, with others citations including long. We're in Washington, D.C., buried deep in the 1,000-page document of the president's big, beautiful bill is an obscure tax measure that started to set off alarms on Wall Street. Joining us now is Bloomberg senior editor Bill Ferries. And Bill, we were just talking about during the commercial break. I mean, this has been in the tax bill for some time. Interesting that it's only now just bubbling up to the surface. What exactly is the concern?
Yeah, so this is what they're calling Section 899 of that tax legislation that passed the House that's awaiting some Senate action right now. It would basically give the U.S. power to raise tax rates on individuals and on companies that have investments in the U.S., but which are based in countries that the U.S. determines have unfair tax policies. So one thing that gets cited quite a bit are countries with the digital services tax. Canada, that the U.S. is proposed to, that this administration is proposed to. It will basically allow the U.S. to raise taxes on half the revenue that people and companies from those countries earn in the United States. So it's a pretty powerful tool, and what obviously the investors themselves are concerned about where this might go. But the bigger question here too is we've seen a weakening of the dollar. We've seen this look for other currencies. That is something we've seen the increase in bond yields. That's something that some analysts say could continue if you're going to put a higher tax on foreign investors interested in being in the United States.
That's something George Sergio was saying, Deutsche Bank. Trade war into a capital war. It might be worthwhile just to do a report about the Musk's time in siege. But countries planning press conference today. We stand on Doge's efforts to put the future of it as to Musk is going back and data's going.
It's been a whirlwind 4 months since the president took office, and the crew from Doge really got to work right away. They dismantled the U.S. Agency for International Development. They worked across a number of agencies to help pressure people into retiring early or into the agencies into laying people off. The goals have really shifted as this process continued. At one point, Elon Musk was talking about saving American taxpayers more than $1 trillion over time. That has been scaled back quite a bit. I think the Doge website now talks about perhaps $150 million, but not all of that is really well accounted for. There's been a lot of talk about tensions between Elon Musk and Donald Trump, and also between Musk and different top officials, top aides in the federal government. So I think what we may be seeing here is an attempt to keep Donald Trump and Elon Musk in their own good graces with each other. In the end, even though Musk says he's pulling away from politics, he has obviously an enormous bank account and an ability to write checks for the Republican Party in the midterm elections and in the 2028 elections. I think Republicans, even if they've had gripes with Musk and how he's gone about his business, they want to keep him on their team, especially when it comes time to be running for election again.
Bill, thank you so much for that rundown. Please enjoy the rest of your Friday and your weekend. That's Bill Ferries there. Coming up, joining us around the desk, State Street's Kayla Cedar will be joining us. This is your Bloomberg Brief.
Why do you need a right next door? This question, you think about have become part of the countries and cities fabric, and we need to celebrate that. So we need to celebrate everybody's identity, its heritage, everybody's history. Some of the things these beautiful institutions. These museums, institutions, so we want to carry an image to ideas cultural history. If you allow me to share it, you start thinking of naturalists. And the naturalistic lens of them, understanding how they came to how our earth came to be, how our universe came to be, from a scientific perspective. Once you leave naturalists, they go to our national nationalism. There you understand the history of this great land, not just the history of the country, the people of this land. They've had never been to this land for over 300,000 years. And a glimpse into what the past and the present and the future is like. From there, you move yourselves to the move, which is before you the person. It's a pragmatic approach. There, you basically see a tilted view on an equal pedestal with the entire.
Key investors, top executives, with innovators, in-depth conversations, biggest newsmakers, on the James, top stories, insight with Hazard and
US jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. The tariff dial gets turned up again. A federal appeals court walks a ruling that has put President Trump's tariffs on hold. Stalling talks, Treasury Secretary Scott Bessent says trade negotiations between the U.S. and China are slowing. And President Trump's proposed tax bill alarms Wall Street with increased tax rates for foreign investors. Well, not only did you make it to Friday, you made it to the last trading day of the month. Perhaps we're seeing trade rebalances going on as we head to the end of the month, but it's also a court ruling back and forth on trade. It's also Wall Street Journal story about a plan B for tariffs and China talk stalling, all that resulting in slightly weaker S&P 500 futures is flying down about 0.1%. Bonds did get a bid yesterday, a solid auction and weaker data. The front end stays home at 393 this morning, and meanwhile, little movement in both your 10-year and 30-year yields. Let's get some stocks on the move this morning. With that, back with us, Bloomberg's Joe Easton. Hey, Joe.
Hey, Danny, so we've got a bit of breaking news this morning on Palantir. Story in the New York Times pushing this stock higher in the pre-market, trading up around 1% at the moment. Story saying that the company potentially working closer with the US government, sharing data across agencies. So they're talking about the IRS and about other agencies within the government, potentially part of that push by Trump to get more data that the US systems and across those departments in general. Around 100 million payment reported in that report for a response from Palantir. Breaking news shaking up movements this morning. In terms of retail, it's looking pretty bad for Gap and also American Gap, citing some concern around tariffs and their guidance last night, and actually missing pretty significantly across their sales. I'm talking about Banana Republic, the weak spot in terms of the brands. But also American just disappointing some of the top ends that their guidance for business expect them to be a bit weaker in the pre-market today. Finally, we've got a drug story. Regeneron, this one hits you. Some disappointing drug data. Product they made with the French company Sanofi on a long illness in former smokers, and that stock 12%, adding to the red that we are seeing in the retail space. Retail from the weak spots today in the pre-market. Those are the movers for me.
Hey, Joe, really appreciate it. Joe Easton, enjoy your weekend. Now, we also have a lot of data out today amid all those earnings. Could it rekindle fears over U.S. growth? Here's what we got in about 3 hours. April's PCE numbers. Bloomberg Economics Expenses software says it's the kind of disinflation that could come from weakening economic activity. Joining us now is Bloomberg and Live's Ben Ram. Ben, what are we expecting today, and how instructive will it be even for today's current environment with the trade back and forth?
Well, I think it will be instructive if the numbers are moved down by side. Let me just put that in context. So PCE has expected a rate of 0.1% from earlier, which I think will equate to an annual increase of 2.5%. Now, if the number brings along the forecast slides, that will be the mildest since 2020. Prices started ticketing steadily higher. So the markets would prima facie welcome back. A double surprise in March for the markets is to suggest because that is what is expected. But however, the higher than forecast trend will kindle the market's worst fears that the tariff and the drama on tariffs is already holding up shipments to the US and leading to empty shelves and the scenario of high inflation as a result. which is why I think that a high number today will lead to a recent. See the 10-year go back to its recent verge of 4.5%. Now, interestingly, that if you look at the 1 year zero inflation scores, they're expecting inflation to be 3.2%. So that 3.2% number is not going to really matter that much unless it shoots higher. If it shoots higher, then the 1 year zero inflation scores higher than 3.2%, which would be a very big outcome for the markets.
Ethan, thank you very much for breaking it down. That is Bloomberg Analyzed Fed Plan. I'm pleased to say that joining me now is Kayla Cedar, multi-asset strategist at State Street. Kayla, wonderful to see you this morning. Thanks so much for having me. How much are you going to care about the data? How instructive will it be for you?
You know, I think what I'm interested most in the data that we get today is looking at personal income and personal spending, just to get a sense of how the consumer is faring. Because the consumer still looks okay in aggregate. It's really, I think it's to bet against the consumer, and we see that again and again. But it's also really important to monitor that and make sure that they're not weakening too much.
So when you look at some of the retailer earnings, just on that report, our reporter Joe Easton was just talking about some of the weakness in Gap, but at the same time, we have Walmart holding up. Do you look at these and say these are individual companies that are struggling because of idiosyncratic issues? Or does it say something wider? Because we are getting warnings from various consumer companies that some of this may be unwinding.
I think one thing to consider too is how much pricing power they have. So not so much on how, for these companies, not so much thinking about how weak or strong the consumer is, but how much pricing power these retailers are at the end of the supply chain. So what we see now is producers are passing on these price increases to retailers. It's up to the retailer whether or not they can increase prices. So that was one thing that was interesting for signs that prices have to increase.
They have to increase, but yet we are still trading at 21 times. And the S&P 500 valuations are pretty rich, especially if you assume there's going to be some multiple compression to come. Are we fairly priced right here?
I think it depends on the sector. And so when we look overall, when we think about especially tech, right? One thing that's interesting is multiples are high, but maybe not quite as high as they were at peak. So to me, that says, yes, there's an overall concern, but there could still be room to rise. I think the thing to consider is if we start to see signs of liquidity issues and signs of credit weakness, that could really chop up multiple issues. But for now, we're cautious. Right? We might not be at peaks yet.
I know you wrote this in your notes. This idea that in past periods of dislocation, it's credit that leads the way. This time, it doesn't admit that. That credit has been playing your state. What do you think of that? What could cause finally some real spread widening? We got it a bit, but then money rushed in pretty quickly to tighten it again.
One thing I'm thinking about heading out further into the summer is what happens with reconciliation bill, what happens with the debt ceiling, or with the debt ceiling when the USDA has to be clenched. Ultimately, that could mean that there's less bank reserves. That could be more of a risk of overall liquidity, but we're not there yet. It's still but that could be something to watch later in the summer.
How much are you watching foreign flows? I know for some reason the tax bill has been out for a bit, and we're now only just getting worried about, I think it's section 899. It's a big, beautiful bill that could tax foreign investments in the US. This idea is just another reason not to put foreign capital in the US. Is this a real concern?
I think it depends on what part of the market you're looking at. So, for example, American companies in our data, we still see a lot of foreign demand for US companies. And so I think it speaks to the profitability of American companies. It speaks to what the margins are, and a lot of that has to do with their quality metrics, a lot of that has to do with places like tech and things like that. But I think for the most part, on the company side of things, are still okay. So the bond market, I think, has been under pressure recently.
It hasn't been pressure though. There's the equity gap. We've seen that before. That higher yields will pressure, especially longer term.
Yeah, I think there's a couple things to consider. One is positioning. At the start of the year, we started to see shifts away from the US and more so into Europe. Now, as more, I would say, caution out there, when we saw higher feel the US far superior, far superior position relative to their peers.
It is a strange moment though in you have higher yields in Japan, in the UK, in the US too. Is there a reason in just asset allocation at this moment that usually the state part of the market has been very volatile? Treasuries may be the risk-free asset that they once were.
I think an interesting way to think about this is looking at where do we expect it to go? When do we think that next? And what right now it's front end of the curve. Cash is still pretty attractive. The front end of the curve is still inverting. And so, if you are looking for safety or less risk, the front end is still very attractive. So when we look at our data, looking specifically at more longer term institutional investors, we see this consistent increase in allocation to cash, not so much sovereign states.
Be with us half an hour Cedar Brexit with us. I want to quickly get you some other stories that are trending. Survey seen as the ECB interest rates to respondents predict for reductions at the June and September meetings. Economists who were surveyed did the central bank so the Trump administration's new term visas for Chinese students is causing many to rethink education options. A Shanghai-based consultancy says at least 30% of clients in the US has to study in the US and work in Australia. Spent. Tech Philly immigrants together and sub-jobs 60% higher trading spike the checks. That's about the average 112%. Again, once again, as a first year balance around the board, this.
I know that. I understand.
So it's a performance of right.
Not without its challenges. We have highlighted the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us and ask the question, what's next? I'm Jennifer Zavisada, and this is Next Topic.
Diagnosis. I worry so much about that and all of that growth. Definitely productivity. You gotta make sure that this country sharing.
document as well as one of the
Undersecretary Heather Letnick there on the administration's confidence in defending its tariff regime from legal challenges. President Trump did win a temporary reprieve from a block imposed on them by the U.S. Court of International Trade. For more, joining us is Bloomberg News Desk Managing Editor Adam Glenford and Kayla Cedar of State Street still with us as well. Adam, great to see you. What now?
Good morning. Well, what now is the question of with the phase of judicial and realistic as you say, the ruling from the Court of International Trade stay last night, yesterday afternoon in the US. So the administration's trade policies we're in a kind of phase where they put on pause and the policies are built on pause. So we're waiting for the verdict to see whether those policies will actually be able to go ahead. The appeals court acts under the trade. The Trump administration most likely look at a series of other measures that it might be able to use to effectively raise the US effective tariff rate and try to change the tariff containers with its international partners. As you saw there, those options that it might have available. Peter Navarro said yesterday, in fact, the government administration don't really consider having a plan, they're just in a plan A. Maybe there are different instruments to it. It's a bit complicated as you go down to try and investigate those sections of other aspects of trading but they do prefer to try and put out if necessary quite serious expert process to try and make that initial routes of the administration they want to get those through see which way they get through.
In terms of allow Trump to support the administration to pass tariffs in specific sectors, and there are other movements about the administration to focus on countries. You have a sense that's going to pivot more focus towards sectors or focus remaining
it's complicated and as we say, in terms of what the administration is going to do, but it's one of the options that they introduced they've used in the past is this section to trade research as one of the pieces of legislation. They've asked to investigate tariffs on China and significant lengthy investigations. For example, the trade that they went out in April using the IP to try and tariffs across different jurisdictions at the same time. That's obviously incredibly complicated for the markets and for the business world as well as foreign governments negotiating with the US. It's complex from the US perspective anyway. It's a clear path sector by sector deals that require specific reasons for it. But that may be they're going to be sort of forming this thing of three sections, 301 powers. Yes, yeah.
I think it's hard for companies to manage tariffs if you think they've had a lot of years in government, just the remainder of this administration, just the outlook shifts. Do you have a sense of how tariffs last how they're applied, precedents, how does that affect the duration of tariffs?
is and markets and governments are going to have to do, as they have been in recent years, make allowances for trade risks and uncertainty. There's no clarity at this point, there's no approach. We're too early in play, we're 2 months into this cycle since information tariffs fail. Season of goods in Asia into the US. And there's already clarity despite some of the ups and downs with China and transparency for businesses. What kind of tariffs they might face right now and alone. As you say, 6 months, 2 years, 5 years time. So definitely seems to be the watchword. There is still negotiations. For example, Japan at the moment, saying the UK is very outline for the trade deal with the United States. It's like in some ways negotiate with the US government against these changes. We saw this trade access just held talks yesterday. So there's a lot of uncertainty.
It's complicated as other countries do much of what's happening in the export system. Adam, thank you so much for joining us. We really appreciate it. And I'm sure just a look at the past week, we got 50% tariffs in the EU put on, then the walk back, that the tariffs are illegal, and then a pause on that. How much do you just look at the latest machinations and say it is just noise and I need to look through it, or do you change your outlook as these different things pop up?
Yeah, there's a lot of whiplash, and you can only survive in whiplash for so long, I think, before you have to discount that this is just an environment. So one thing that we do is we actually track media sentiment and coverage of different topics and regress that against different markets, whether it's equities or the dollar. And so we can kind of track what topics are important for different assets. And it's interesting because for equities, when we look at coverage of trade, we still categorize it as important hype. It's still a key driver. But the R squared, or the strength of that relationship, is decreasing a little bit. And so I do wonder if, markets are starting to discount this a little bit. However, it's certainly, we're not in the clear, we're not out of the woods. And I would say and so it's just going to continue for a little while longer.
Great. So we can worry about the budget or something.
Yeah.
So Kayla, you're sticking with us. Thanks so much. You are watching Brief.
Rebuilding really took place. Really took place until April this year, and it felt like we went into another COVID again because one of our best clients, Canada, people Canada, it's easy for them to get over to the States, get to the Southwest, and we were finally at Toronto, so canceling because they didn't want to support America. But that's what the thing is, that goes back to every aspect that I've tried to do in my industry. I can talk to raise prices, talk to any loss, any thing. Yeah, because we raise prices by our suppliers, because it's going to be an increase on all products. Facing by huge tariff to China. And the other tariff to Taiwan, Mexico, and those are working for the bicycle business. And so that 10% minimum, we were approached by our suppliers, and they said, "Hey, look, you're gonna have to close the economy." So.
Ideas and investors around the world are exploring them in which content, helping to translate policies from Washington into simple ideas.
It's the morning show you actually want to be on.
Separating the signal from the noise.
This is Bloomberg Surveillance.
Bringing you up to
Delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. A magazine that helps world leaders stay ahead. Bringing insight and the people, companies, and trends shaping today's complex economy. Very big days. Plus global business, finance, and tech news as it happens. Gates of innovation are going to open up.
Can't say cash, you are.
Speak Daily on Bloomberg.
Small business.
Happens. It was 6:17 and this is Okay, you set up for your trading day this Friday. More economic data, US PCE, personal income and spending. That's at 8:30 a.m. Eastern. Then Trump holds a news conference with Elon Musk at 1:30 p.m. as Musk leaves Doge. The president is also expected to speak again at 5 p.m. on a partnership announcement between the Elon Steel and US Steel. Pennsylvania, Cedar of State Street is still with us. And Kayla, you were just telling us how the market's concentration on trade is still there, but it's starting to end. As the tax bill percolates, makes its way through Washington, is this the next risk for markets?
I think this is definitely the next topic that is going to be something that is front and center over the next couple of months because there's just so much time within this bill. And it has to get passed because the debt ceiling is part of it. So
look though at this idea just quickly, Kayla, if we're going to maybe have sand in the gears of the works of tariffs, less revenue, more deficits, is that a problem in itself?
that's definitely top of mind. You know, looking at the income that we got in April from tariffs. Looking at tariffs as a source of fixing the deficit, that's going to be still a very high bar. And so if you are a deficit, it doesn't look like these tariffs are really a solution to that. And so bringing it back to what's happening in terms of the reconciliation bill, funding, things like that, you know, that's going to be a concern.
What a year we have ahead of us. It's already felt like it was a decade. Yes. Thank you so much for joining. We really appreciate, so generous with your time. Thank you, Cedar of State. As we head to the end of the hour, a quick check on your markets. A little bit weaker, but not that much going on. S&P 500 futures down about 0.2%. It is a stronger dollar, snapping some multiple days of weakness. You're looking at U.S. 10-year yields, little change. But we did have the latest survey from Bank of America, the Flow Show, looking at data showing the latest outflows global equity so far of 2025. Great, that's it for your Bloomberg Brief. Surveillance takes things from here. This is Bloomberg.
Real quick, so she looked what's happening here because of the Yeah. There's a lot of burden on the banking system to those analysis. The other area. Operating time. I understand. Now, this was just like so. That's another
Boys, the biggest. And increasing focus on economic data. There's growing increasingly love to policy. Perfect. And then it change basically said in his on China though. This traders. I don't want to see that not navigator and it's president's face just yesterday. First, Donald Trump's they ignited this meeting. Telling them I'll say that. I'm sure what ignited it. I think that came out with drops again next Friday, which will really determine how much bus we get in the key market, which has been for so many different like continuing claims that bounced back quite considerably in the past couple of weeks. One thing that's really key, and you saw the confidence report, the survey recently. Gas prices are lower. Really want to see impact to their entire economic agenda. So it's kind of just a little bit, but it's the biggest monthly gains.
roller coaster of in terms of trade deals. Bond markets are seeing yields pretty much at some not coming up. John Solsvis of Oppenheimer is the rally fades on tariff uncertainty. Neil Dunham of RenMat with President Trump putting Fed Chair Jay Powell in the hot seat again, and Steve Englander of Standard Chartered on why a U.S. dollar crunch might be looming. We begin this hour with stock study, the rally fading. Secretaries once again to markets. John Solsvis of Oppenheimer staying bullish, writing we remain positive on equities. Backs earlier this year, mostly like trims and haircuts for the S&P 500. John joins us now. John, wonderful to see you. Happy Friday. It feels like a very long week, a very long month. Does the rally that we have seen in the month of May make you more or less excited about getting in?
Makes me more excited to stay in and then looking for any babies that get thrown with the bathwater as we go through it. Inevitably, volatility going forward, these things get worked out in Washington. These are how they work. And between parties.
Over the past month, and I don't mean this was sort of existential level, in terms of how companies are dealing with the tariff uncertainty and the tariff reality that's already been imposed.
I think what we've learned is that it was certainly idiosyncratic. It depends upon the management of a company, what type of business they're in, where they are sourcing their goods, the effects of tariff policy when you look at just earnings season. I mean, earnings season for the S&P 500 was over 12% earnings growth year to year. You've got 3 sectors, if not 4 sectors, double-digit earnings growth. It includes both technology and communication services. 2 sectors are probably really different points this year. Is balanced. So I think just this is the reality of an environment which we're seeing a very different change offered by this current administration in Washington related to trade. And it's was in place for, well, it goes all the way back to the end of World War II, the world, but it's 87, 60, 50, 40, 30, 20, 10, and now years. Essentially, we've given away so much of manufacturing processes. Okay, so while the rest of the world is over capacity of manufacturing.
Yeah, well, let's put the concept aside of what the ultimate goal is and go to the actual implementation of it, given the fact that we've had a lot of back and forth about what the policies are. And a lot of companies have said, look, okay, with tariffs, we can manage through it. Just tell us what they are and give us some policy certainty. Do we have any more policy certainty today than we did on April 30th?
I think not a heck of a lot more, except we do know one thing that we have seen since this year has progressed. There's been a willingness by the administration to extend deadlines related to tariffs that are your owners. The April 2nd rates of tariffs were stunning. We're looking for that. I think the market reacted. The administration responded. So I think I do think it is, ultimately is, I'm using lots of things. I think it's what the Temptations used to say. And I think there's a real issue here in terms of how things are communicated sometimes by the administration and by their detractors also, which keeps actually extends the process of advising so kind of resolution, I believe. But he's asking me other you're so kind to me. I don't think the administration, the opposition to the administration is asking me.
Not to be too cute, but then the taco trade, Trump pushed chickens out. Still true to that because we have seen take these reprieves when the market has pushed back.
I think I don't know if it's rumors that he chickens out, but he certainly does change his regime in terms of the policy of the day. And that probably has to do with the Art of the Deal, which is a book that I think I'm going to order from the big Geeks delivery people today. I think I haven't read it in all these years, but I think I better look at it. I think this is a process. It's impacted for the midterm elections, and in that process, I think perhaps in a way that has not been has been well received.
different trade. Is that China concerning the direction of travel?
Period of negotiations. Negotiations makes profits, but we have to with each other. I think it's quite good. It's very easy. It's this kind of thing. And I think it's unrealistic for us to expect leaders to play it, by the way, on a day-to-day, minute-to-minute basis. If we're intermediate term, a longer term investors, come out with this format like times I think certain concerns when it comes to trade deals. Phase one trade deal. Aren't we going to see stop and go reactions from Beijing and Washington in the next 6 to 12 months? Yeah. For China, they it's not big enough for 30 years. For countries over graciously Mexico at least, and closing Mexico case small China over the years, and they changed a lot of time. And we have to say this is we come out of this not any globalization, diversification of globalization, beneficial both development national markets and emerging trades here. Because there be some things that are coming back to the US. National defense, national health care, just in terms of medicine, really over the counter. Cause less fundamental dollar bonds or the past couple of years. Like Virginia, like bonds. You know, I tell you, it's just equity buyers. I'm fixed income. Or at least I think that what we determine is to buy less debt, even downgrade over the course of the last 10 years. What you have is still have accountability, governance, transparency. Just look at the arguments that happening. The president tries to both side and then coming back and appealing, falling back and forth. We've had this in this country again. All of this is around for and Thomas Jefferson's. I think it's important context is that the context around this business. Great. It's going to say it's this great system and they are thank you so much. From just other authorities if it China maybe reward President Xi Jinping in order to reach
he was the Chinese leader in days after trade talks were due this month, but their first in-person meeting since the inauguration. The Fed says the president has been out to discuss economic developments for employment and inflation. White House Press Secretary Caroline Leavitt says Trump used Powell to lower interest rates and didn't even discuss whether Trump would see through his power. Thank you so much, Daniel. That's describing deals.
For the U.S. this administration is committed to fair trade and we are making the best deals for the American people.
Alex Institute are joining us in action. This is Mark Alex. Two times a day, every trading day, balance of power at 1 and 5 Eastern, only on
Interest. We're trading commodity.
We are poised for its best monthly gain going back to November the first weekend of this administration 2.0 after our still up 6% on the market. NASDAQ down by about 2%. On space, actually, stability. We had a solid option. Great in terms of solid adoption so far this week. As said, maybe that comes ahead of that again in 2 hours and 13 minutes. I'm just really
Great agenda. The U.S. administration is committed to fair trade and we are also making the best deals for the American people and anything that the courts do to get in the way of those terms the American people in terms of trade and in terms of tariff revenue.
Secretary Scott Bessent saying deals here. The Trump administration's appeal to tariffs in place. I would start with you with the latest state of play after yesterday's turmoil over just whether some of these trade provisions were legal or not.
The turmoil is far from over. In fact, it will continue for the next few weeks. This uncertainty as the appeals court takes breaks from both sides in the case to weigh further whether to uphold the trade court's decision that the tariffs crossed the line. The president went too far in invoking this emergency powers under a 1977 law to impose the reciprocal tariffs, as well as those connected to fentanyl against China, Canada, and Mexico. So we will have to see. And what this court decides, Lisa, we could see this case go all the way to the Supreme Court. Given the stakes, the administration has made very clear that if it loses at this appellate level, it will go to the highest court.
There's a question right now, and Adam, I'd love to bring you in. What this does to the state of trade deals currently ongoing. We did get some color on that yesterday. What's the latest, particularly with US and China?
In the US and China, it's very interesting. Treasury Secretary Vincent said late yesterday as well with your analysts that talks of some stalled. There was that agreement a while ago to Tips and Switzerland to the punitive tariffs, the very highest levels of tariffs. But suggesting that fall between the principals and President Trump and Xi Jinping of China. That was China suggesting something that the Chinese were very cautious about and quite reluctant to put Xi Jinping. So I thought it was interesting that we've seen Vladimir Putin and President Trump talk. Recent view, of course, the president saying that this would help afraid that at this point hasn't happened. So it's really interesting to see how this all plays out as President Trump attempts to kind of use what leverage he has on the international stage to keep those trade talks going. Interestingly, one little side note that we're going to speak with the EU over trade, and those talks are continuing. Trade Representative Maros Sefcovic, posted just this morning that he held, and he quotes solutions talks instead of the Secretary out. So these things are still going on despite the legal development.
Adam, for both of you, thank you so much for supporting the focus of policy data trade discussions that we get every single day. Joining us now is Alex Usta, Institute. Alex, I just want to start now. What if anything for the past couple of weeks, the past couple of days in particular, with respect to the legal process involved with some of these tariffs?
Quite a bit. If you recall, Trump's Liberation Day tariffs were initiated under the authority of the International Emergency Economic Powers Act. The U.S. Court of International Trade ruled that was unlawful, striking down those tariffs. And the Court of Appeals now, the Trump administration is appealing this. Rest of the day, we're putting the tariffs back in place, at least temporarily. They hear this. I think what we've learned is that there was an incredible amount of policy uncertainty in the United States, coming from the courts and from the administration. The Trump administration has imposed numerous tariffs the second time on lots of different countries. There may be the IUPA authority that was struck down international trade. The other hand, the courts may be finally showing some and some is reduce the congressional delegation trade authority, which has been a personal institution. Even the president's most magic words,
See absurd, but the direction of travel is not going to change. Even in the court's own ruling, it talks about how the administration basically tells them you could have just used Section 122 to get your goal.
Direction is not in doubt, but I think the magnitude and the severity of the trade restrictions are in doubt and up in the air, and the stability of these. So, for instance, if the trade authorities that the president has that allow him to raise these tariffs, and there are different sections, there are subject to different constraints, and the different constraints, different types of emergencies, different types of findings that need to be made to justify these tariffs. So he is bounded a little bit more by some of those tariffs than he is by the International Emergency Economic Powers Act, at least as he interpreted it. So there are some restrictions on there, but I think this could mean, if it's the best, is this goes to the Supreme Court and they rule like this is a non-delegation, this is the unlawful delegation of power. That would be the best outcome, is to put this in the hands of Congress. And then, Congress doesn't show itself competent or very assertive, maybe this is one way to get them to actually do their jobs.
How do you think this is impacting the current negotiations the administration is having right now?
That's a great question. I don't have a lot of faith in these current negotiations. We heard about the British trade deal that came out. It was really not that impressive. The old tariffs are still higher before Liberation Day, before Trump came to office. So we hear a lot of local deals. We don't know a whole lot of details about what they be. But what I do know is that Secretary Bessent and others of the administration are using terms like fair trade, which I would have to know. To remember that fair trade was a talking point used by protectionists and anti-trade people 20, 30 years ago. So I'm not hoping that these deals are going to meaningfully liberalize trade. Maybe more liberal trade than after Liberation Day, but certainly trade policy will be less liberal, will be more taxed, will be more regulated than before Trump took office.
Specifically here, I'm curious how much you're watching the tax bill as one venue for trade policy, in particular, Section 899.
So I'm not familiar with Section 899 specifically of the trade bill. Which section is that?
Basically, this idea of taxing foreign capital coming into the United States, the idea of the backdoor ability to curtail trade on some capacity.
Yeah, so taxing capital that comes in the United States is just a horrendous idea, and it will reduce American exports. A lot of American exports are financed by the capital account surplus into the United States. So that is a horrendous idea that pushes actually against the president's stated trying to expand exports and reduce the trade deficit. Furthermore, it will reduce the opportunities for American businesses to borrow in the international markets.
Alex, thank you so much for your time. And there are so many different esoteric provisions. It's hard to keep track of them for all of us. Alex Nowrasteh of the Cato Institute, and we're all watching to see what other ways they're going to try to affect trade. Right. And Deutsche Bank's George Severella says basically you can turn a trade war into a capital war by using this provision, which they might use in the One Big Beautiful Bill. Coming up, we've got Neil Dutta of Renmark, President Trump putting pressure on Fed Chair Jay Powell yet again. This is Bloomberg.
Interesting. The stock market is looking at kind of back and forth. Market and market things that hard to follow the top of the stand. Trump's always fixed that. So Jimmy Kremlin, I think it's work. It doesn't. You're not going to be intimidated by Frank Stretch. You're going to say, "We can fix that." Press folks can do today. You want to worry about something really serious. Worry about your experience. That's what I was about to do. It was very happy. Well, I just think it's very good. I have position when the right as a team. That's part of it. Yes, that goes back. Second, what consideration? That's great for especially in 2022 or sorry, this is good.
Once again. Underground coverage, the number is quite substantial. Trading of the week, of the month, at a time we're seeing it. It's 6.2% of the S&P 500 so far, more than one say. A little bit of that back, right? But just, and there's the sense that actually some of the process back and people focus on the earnings reports, the economic data, and how the real drama in the bond space. We're seeing for the first time in a while with dollar strength. 3 hours away from the cash flow. Here is the first with a T-burger in. So I got some to go for them. Extra detail. So several sources of really 1.5% in the free market. It's all about AI servers. So that's because of the strength here. They've upgraded ability. They've upgraded their earnings. You see expectations. They have $12 billion worth of orders and one of the major supports for AI servers. That's more than they put into the entirety of last year for them. Interestingly, consumer business sold 18%. That's good for the consumers. We also had some retailer earnings. That was a disappointment for this market. Just actually down 17%. Part of it was what they said about tariffs. They see $300 million coming off because of tariffs. We also saw some weaker sales, especially in some of their smaller brands. American Eagle, a very similar story. The tariffs hit and it was a perfect storm for them. They had the office discounting. They also had weaker sales really across the board for their brands at the same time. Inventory right now is so difficult for these retailers, especially when they're already struggling to understand just how much inventory to stock up as things get more expensive. Lisa, those shares down 7.8% to the pre-market. Thank you so much, Danny. Tried to that as well, sort of out of there. These are very challenging, just half the show. You don't know the direction of travel because there is no certainty right now. In the last 24 hours, basically has shown companies, even if you're planning for something, like why are you saying to a John who's participating in retailers? Excuse. President Trump's video federal appeals court temporarily acting a ruling blocking the majority of the election errors. The current bill has until 9th to reply. And right now, we're going to present some big sites and absolutely. And the Wall Street Journal talks about what they are going to do this full response, which is we talked about today yesterday on the show about the options that many of the president's trade advisors have in front of them. And Wall Street Journal says they're thinking about doing this stop gap bridge. Bridge. Go to there's two things. One, the president wanted the entire scope that is proposals. And I think that it's negotiated. So like the part of the deal to the high and then he himself section 122 15%. July 9th, coincide with we're talking about those deals as spring work cases, in fact, trade negotiations, Secretary Stubb
needed to start the deal. And I'm not really surprised about this because the states has changed the Treasury Secretary who cited this with a brief correspondence between Beijing and Washington. What if they the United States go after the Trade Center Huawei off their allies around the world? So Indians potentially might not be just one to China. We have reporting orders that they're going to send potentially arms to Taiwan that Trump agreed on in his first administration. So you do see a ton of tension between Washington and Beijing. Missing President Trump putting pressure on Fed Chair James Biden. First meetings since the inauguration. Economic data. I think that's quite a bit of it. A lot of them say right now the president wants to switch 30% of the economy. So all this sort of Fed example. I wish someone was a fly on the wall that we can all call about this meeting and maybe something else not to leak out. The president has been not this the Fed chair went in and he said what he's going to say. And the Fed chair became state by not bringing interest rates, putting the Fed at an economic disadvantage to China and other countries. Message by this. China's cutting rates, basically rates the Fed are reviewing. So a real question actually justifies it. Someone is going to that argument for a long time has been able to does join us now. What did you make yesterday? Coming out of the White House, the first in-person meeting with Beijing Powell and President Trump. Points, particularly GDP, personal income is necessary. Two things, even with
job is to make decisions with information. So this is using so as to just make everything out. This is really science. I do think that companies are probably, for the time being, I think they're getting version of the sort of inflationary impact of the materials that you think are all the time. So it's not like it's good. I think the event is more important going into the situation. The most important thing that happens is that extended unemployment rates carries that's those newly basically in the sort of ranks of July, right? I think, frankly,
can rule out a scenario where kind of looks like what we saw last year, waiting and all of a sudden and more than that.
This is a long-term field curve for you. The fact that some people believe that there is going to be longer-term structural inflation and a term premium, and the Fed looking more competitive at that.
Sure, that's again, that's the reason why the long end is no. A lot of it, I think, has to do with what's going on. If you look at some of the movements, data overseas. It's not that people don't want to hold U.S. bonds. They don't want to hold long bonds. The curve is steepening everywhere. So I wouldn't play that, as purely like a U.S. centric thing. I think the bigger story is that the markets haven't really had to come to grips with the idea that the economy might be slowing. We haven't really had that one piece of very bad hard data where it's like, sort of recession risks are higher than we thought. When that happens, I think you probably see Mother Nature kind of taking course, not only for equities but for fixed income markets as well.
Mother Nature is a fickle, as you know. There's been a change in the narrative recently that the U.S. Economic Securities Index actually rising to the highest levels that we've seen, and seen consumer sentiment actually change to up itself closer to some of the data. What gives you confidence that, especially as some of these tariffs are worst case scenarios, there will be a slowdown that is not showing up in a lot of the earnings that we're getting from different companies that are managing to weather this? Just
if you punch someone in the face over and over again, and then you decided not to punch them in the face, so that means that they would be okay at that point. That's all the confidence data is telling me. Right? I mean, I don't know that there's anything interesting. That to me, the most interesting data within the confidence survey is simply that consumer attitudes around the labor market kept getting worse. To me, all the confidence data are reflecting is the fact that equity prices broke. Nothing else. And it's important for people to remember, even though the stock market's had a really good run in the last 12, 18, 24 months, that hasn't stopped conditions from continuing to cool down. That hasn't helped. I mean, you talk about loose financial conditions. How about that? If financial conditions are so loose, why are home sales so weak?
because mortgages are still so high.
Sorry, go ahead.
Mortgages are still too high for a lot of people to get on the popular.
Exactly. So that means the financial conditions are in fact not that easy.
This is the point of just in how to interpret data that you say is unreliable. Do you think that the housing market data is actually the number one indicator to watch, as you did see pending home sales yesterday?
I think it's important. I think what's important about this decline in residential investment that we're seeing right now is that it's coming alongside ongoing decline in units under construction. That didn't happen last time. There's less building going on, and if there's less building going on, there may be less need for construction workers. Simultaneously, we also know that resale inventories are rising, and that's weighing on home prices. Importantly, it's weighing on prices in the areas where the builders have been making the most homes. So again, that goes back to the construction piece. But again, it's important to kind of understand how the sort of some of these data points, how the sausage is made. I mean, you mentioned the surprise indicator. That's the city economic surprise indicator. If you look at other measures like your own Bloomberg economic surprise index, it doesn't really show that. So it's important to kind of know which indicators to look at and those numbers are going up. I mean, we saw a very large increase in consumer confidence, and that delta is probably why these indicators go down. But when you sort of peel back the onion and take a look, the things that actually move more, slowly, like conditions, that shows you that things are continuing to get worse.
And some of the consumer confidence data in the same way after the punch in the face analogy that you just drew. Neil Dutta of Renmac, thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here
Here is your Bloomberg brief with Sandy Berger. Danny.
Lisa, Israel has accepted a U.S. ceasefire proposal for Gaza, a 60-day pause in fighting for some UN-led aid distribution. The proposal also includes Hamas releasing 10 life hostages, returning the remains of 18 who died in captivity, and starting negotiations for a permanent end to the fighting. Hamas has criticized the proposal as one-sided. Monday, getting ready to raise prices for its U.S. vehicles to cushion the blow from President Trump's tariffs. Sources telling us that the Korean car maker is weighing a 1% price hike for every model in its lineup as soon as next week. The move would apply to newly built vehicles, not those already sitting in dealership lots. And President Trump will hold a news conference with Elon Musk later today at the White House for Musk's departure from Doge. In a post on Truth Social last night, Trump said this will be his last day, but really because he will always be with us, helping lead the way. Elon is terrific. In the past 2 weeks, Musk has sworn off future political donations and criticized Trump's signature tax and spending cut proposal. And that's your brief, Lisa.
Maybe there'll be cupcakes. Danny, thank you so much. Up next, stepping away from the dollar.
Especially the fiscal deficit and debt levels do not show any real discipline by US policymakers.
Stephen Winder of Standard Chartered joining us next right now. This is Bloomberg Surveillance.
Well, only from the perspective of Tesla shareholders, this actually in a way paid not on prices. And so there have been growing concerns that the distracted and the very challenging these day job of running is very complicated.
And also we get all this revenue for an tariff. Why would the president be pushing superior taxes on anybody? Because our understanding is for the wealthy, he's looking at a new rate of 39.6%. And I think the Republican Party didn't stand for that kind of thing.
You realize that the tariff revenues doesn't count reconciliation numbers. Don't ask why. I can't understand why we're at like 25 billion a month and they're not counting it, but this is Washington, they have their own accounting practices. So the president's trying to make sure he gets no tax on tips, no tax on overtime, and no tax on Social Security. And if he says, look, just Americans, remember he cut it from 39.6 to 37. So he just goes back to what he did last time. You know, I'm in favor of that. I think it's smart. This balance of power live every weekday.
Region rife with potential for growth and opportunities, but not without its challenges. Highlights the biggest stories, interviewing key players, on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Seasons. Can't wait. It's like opening presents.
Exciting.
So I do think at the end of the day, people feel that it's gotta be really coherent, stepping away from the invitation and focusing on all of the very benefits.
We are getting the first monthly gain for the S&P 500 so far since January, the biggest 1 month gain going to November. We gained about 6.2%. We are taking some of that back this morning, but just a little bit. With NASDAQ futures lower by about 1/10%. S&P futures over as well. We take a look at the dollar. That has been one of the most interesting trades all year. We're seeing a bit of dollar strength today. We have seen about 7.4%. Pushing capital out.
Right. These are the dollars who are the advantages and you see that.
Here is the latest. We are edging higher, carrying a fifth says Stephen Under more trouble ahead, saying, we think 2026 and beyond may be on the risk of a major dollar move becomes more elevated. Is there not necessarily any kind of next year possibly bringing a bit more of an issue?
We'll see the outcome. Yeah, maybe. Comes between softish and inflation. It's going to be, like lending to you.
The actual data to back up what you're saying. The world going slowly.
Basically right down for the past couple of weeks. Pays for several right to disconnect contact you by your any fire. In Europe, which I say, ready. All the ways outside. Mike Shepard, Peterson, other conference staff, vice president, sure that of course through the fire policy changes and possible because and if you want to hearing a thousand postmates. From the technology now the issue how they came through of a very high quality because this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. Algorithm tells me what I like. We have incredible penetration and we have so that has been very lucrative.
This hasn't happened. Daily.
Necessarily for health.
Realize for our audience at worldwide. So I'm very hammered and stressed by getting every single day. Markets have stopped really paying that much attention and have moved on to say what is actually going on with the economy, what is actually going on with the consumer. And we'll find out also as well as how the economy, the hard data is holding up. And it's timely that inflation gauge that the Fed is so focused on. When it comes to policy though, the direction of travel is very clear for this administration. What everyone is concerned and confused about is the levels of public policy. John Stoltz says this morning, the way that you think that's the problem he has with what's going on. Is the end views that the advocates and headlines and potentially tariff policy getting caught up in the courts to understand exactly how quickly the administration present their three-pronged stool. Yeah, I do believe that he was quoting the Temptation song, which had a very different implication. I believe it was a love song, not necessarily criticism. That has been surprising to the side. Right, you were talking about we are getting a read on the inflation, on income and spending throughout the country. Getting that in about an hour and a half. There's a question here about whether the economy is strength of the economy, companies that are adapting and adjusting. Some of the uncertainty we're seeing. Data and their survey, it looks like people are starting to feel a little bit better. We'll see it in the fields with the University of Michigan also comes out later today, although that's highly politicized. People are feeling better when the tariff headlines get dialed down. But you've got a sense. Anytime you're going to punch someone in the face and you say, I'm not going to punch you anymore, is the effects still there? Of course they are. And he doesn't think the tariff policy has anything to do with that. And the economy is slowing. We're going to be able to read on that next week of working at job data. I'm still trying to wrap my head around that. He's saying that people are getting punched in the face, and then if you don't punch them, then they're happy, and then that's basically the rebound that we're seeing in consumer sentiment. I think he's saying like it's rebound, but still the damage is done. Meanwhile, we're looking at markets that are not looking very damaged. We've had a 6.2% gain so far in taking a little bit of feet out of that with about a 10% decline in the NASDAQ and S&P, a little bit larger in the 2000. But what we have seen is a real numbness right now in markets to potentially negative tariff news and a real enthusiasm for NVIDIA's earnings, for Costco's earnings, and other names that have shown a way to really be beyond. We also have seen strength in the bond market, which is giving a bit of support after a bunch of auctions this week that went surprisingly well. We are seeing the 2-year yields just a touch, but all around somnolent after a pretty wild ride for the past couple of weeks. And then you have, of course, the currency markets, and what a reversal. We actually are seeing dollar strength this morning, even though if you look at the dollar spot index, it's down by about 7.4% for the full year. Coming up this hour, Abby Yoder of JP Morgan Wealth Management on a wide range of outcomes for equities. David Peterson of the Conference Board on falling CEO confidence, and Mark Short, former Chief of Staff to Vice President Mike Pence on President Trump's trade agenda. We begin this hour, stocks pretty much steady as investors await economic data and trade news. Abby Yoder of JP Morgan writing this. We have widened our year-end 2025 base case range between 5,700 and 6,200 to reflect increased volatility and uncertainty. Abby joins us now for more. Abby, wonderful to have you. Thank you for being here. I am curious if the rally that we've seen so far in the month of May gives you more confidence or less confidence
that right now we can get more gains?
Well, I'd say more confidence. And like I said, like what the quote said, we have widened our range because there is a lot of uncertainty. We're not trying to bypass that very, very large fact. But that being said, I think you mentioned this, like what we're hearing from an earnings standpoint, and again, 1Q is backwards looking, but I think, companies have really navigated a very difficult environment for the past 5 years. Like this isn't new, right? Like they've had to do this, and even before that, right, 2018, we had the initial trade. So I think they're very well equipped to deal with this. We had expanding margins. That wasn't something that I think the market was expecting in 1Q. And so the beat rate was really strong. And I think the outlook, like while uncertain, is still fundamentally sound heading into what is uncertain.
You hinted at this, there's a backward-looking element of this, which is, this is after a company's backlogged a whole host of different products managed to get ahead of this. How much of this is repeatable moving forward?
I think so. Okay, yeah, maybe they did stockpile depending on what industry you were in. I think what we heard from companies, when you have a framework and a thought process for how, like, okay, this is how we're going to mitigate. It's either going to be, for the price increases, we're going to take price, depending on what industry, for instance, or price taking or price giving industry. Like they've really laid out a framework for the most part, these high quality companies to move through this. And I think like, hey, this is where the ranges are. This is what it looks like for us. This is why we have like a wider range of increase for the full year. And I think that's testament to how well these companies can be.
Does the IEEPA court case change any of your thinking?
No, I mean, it was reversed like by the end of the day, right? And I think
it still could be struck down.
Yes, it could, that's true, but it doesn't really, the only thing it does is it incrementally, like in the morning, we were talking about incrementally moving closer to our peaks, right? Like that's, and it removes that left tail risk. I think that's an important aspect of this too. I think a lot of guests have been talking about that, but I think that's the direction of travel where you're not really, because if we think back where we were April 2nd, the market was completely frozen, like we're at 28% tariffs and, nobody knows where this is going, who's coming in terms of like, is it the Fed, is it the president, like, is it the administration? Nobody was doing anything but silence for like a week, right? So removing that left tail risk, I think, is important. And our base case had around 15% effective tariff rate. I think that's like the cap at this point, right? Which is a very different area.
Do you hope to have more clarity before or after around July 9th?
Yeah, I mean, we all, like, I think that's important, but also it's gonna get there. Oh, yeah, I think so. I think we're working towards that. I think why the market was so muted yesterday, originally obviously reacted positively because it looked like these were being removed. And then it was like, oh, wait a minute, this is gonna become, a bigger battle where we had made headway in terms of these other negotiations. Now, like, our counterparties like may not want to negotiate because they know this is on the table, that it might be removed. I don't think that I think the administration understands that this uncertainty is going to slow down, and they're going to want solution.
There's a feeling in markets right now that policy noise is increasingly becoming noise. It feels like people just kind of luxury and getting this sort of, maybe I need just some time to process everything when it comes to the policy changes. Not quite the same when it comes to economic data. We talked about the company earnings. How much do you think that the economic data is going to actually matter quite a bit more for the next few weeks?
Yeah, so we were thinking about, and this was prior to yesterday, like the way we were thinking about it is we've seen the earnings revisions ratio, which is essentially like a confidence barometer of what's going on in terms of earnings of companies, the S&P 500. That's been steadily moving down throughout, like leading into the earnings season, and it's stabilized, right? It's negative, but it's stabilized. And then you started to see it, and this is for the US, and you started to incrementally like move higher. And what we were thinking is like, okay, after the pause, on July 9th, depending on what happens, like we see more down revisions. Like now, does that get pushed out, right? Because you have seen this recently in economic data. We don't really know what's going to happen in terms of July 9th. So it seems like there actually is more of a floor in terms of the earnings revision ratio that we were waiting for it to come down further. So
I don't want to get too cute here, and I don't want to go back to this phrasing because I think we all are sick of it. The whole idea of bad news being good news when the bond market starts to actually rally gives a bit of a boost to equities. How much
the returns in the equity space really reliant on the bond market having a bid, for whatever reason. I think it could be, so I think that question gets really what the biggest risk is. Right? Like, I think the biggest risk is like what happens with rates. Like, there's a very, a lot of work has been done and it looks like the equity market really starts to struggle when the 10-year gets above 50, right? Like the level that is really difficult, we've been like hanging out around there. And so I think that's where you get more of a bear case. If you see that, surprise to the upside of 475, it's not our base case at all. But I think it would be a tailwind for equities that they're not necessarily expecting to see, the 10-year move lower below that like 430 area. So this goes to the question of why are yields potentially moving? If they're going lower because of bad economic data, does it really provide a boost? And if they're going higher because of good economic data, how much of a drag is that? This sort of puts the equity market in a bind behind, be careful for what you reach for in the bond market. I think the last time I was on with you guys and I was talking about this, I said, a few months ago, I would have thought the Fed cutting would have been like a net positive for the equity market. But now at this juncture, to your point, I think there would be a digestion period if the Fed were to all of a sudden be like, oh, we need to cut, it would be because the labor market is deteriorating rather rapidly. The equity market would not take that well. That's like very plain, right? But that would be prior to probably, a rally after that, right? Because the market moves before you get into a recession and before the bad data really comes to fruition. So where do you put capital in this moment? So we think we have a preference for financials and software within the US and utilities. I think financials is really interesting, right? Because that was kind of like a consensus long coming into the year. And then it kind of paired off because there was no, capital markets activity, no M&A. You started to see that kind of pick up over the past couple of weeks, like the past 3 weeks you've seen. So like, green shoots there. And then, underneath the surface, you also, some of it's well known, like SLR, which have been obvious, but what happens with the CCAR test reform, what happens with GSIB surcharges, like I think that stuff is really interesting and there's a wide range of outcomes in terms of what goes on. But the direction of travel for this administration is to deregulate, and they have $200 billion in excess capital, right, to deploy into M&A, to loans, to buybacks. I think that's an interesting story. You stockpiling homes in your basement? Not yet, no. Heavy Yoder, if you're the only that's doing that, sticking with us. I wish I were doing that. I don't think that do you like Costco, a basement. I heard that was the case, and I heard that Dawson actually took, exactly. Welcome to the city. Let's get to an update on stories elsewhere this morning. Here is your brief with Danny Berger. Danny.
Thanks, Lisa. Harvard University has won a longer-term reprieve from a Trump administration ban on enrolling international students. Harvard sued the administration last week, claiming the ban was waived. At a hearing in a Boston court, the U.S. district judge extended the temporary pause that she had set in place. The Justice Department has asked a federal judge to dismiss its criminal case against Boeing after the 2 fatal crashes of the 737 MAX jets. The reversal in the long-running case over the disasters in 2018 and 2019 comes despite objections from some family members of the 346 people killed. Hyundai is getting ready to raise prices across the board for its U.S. vehicles to cushion the blow of President Trump's tariffs. Sources telling us that the Korean car maker is weighing a 1% price hike as soon as next week. The move would apply to newly built vehicles or those already sitting on dealership lots. And that's your Bloomberg Brief, Lisa.
Thank you so much, Danny. Another reason why people are trying to buy ahead of those price increases. Up next, still talks with China.
What about China? How can you characterize those talks now?
I would say that they are a bit stalled. I believe we may at some point have a call between the president and Party Chair Xi.
Breaking news. Powered by 600 murals across the globe. Investors. Pretty covered morning after a month into the 6.2%. Even after Trump was president, not seeing much action. Itself. For the first time, we have consumers as well as
the president
Confirming the three talks despite making progress with other countries. Like
for a fall, I think that's from we failed to be in one direction. China is not moving. It's my counter. And see tariffs that to me, and that's this stuff that's some of the basic has been taken by the community as the visual basically the talks on stall under side of trade. China has been really for the past years escalating series of control. China, Chinese companies the ability to develop advanced technology area of AI and sophisticated. Also, semiconductor services Russia against America. That advanced technology that happened. Just This kind of an effort to enhance its tech, intelligence infrastructure act. Controls areas have strains to two sides just as they're trying to how it's more than just about tariffs. They're really actual changes.
Understanding what is necessary to understand when it comes to how we see any administration use the Johnson things potentially find out by being engaged with China. They're already rapidly improving their technology.
And still he said during their earnings call, and $4.5 million right there just on those H20 chips, and they're concerned. American there, and if they walk away trying to that's really where China should in Washington. Say, okay, spend years.
Thank you so much for doing that. It's nice and important synopsis there. So, Savvy, I want to go to that. This question of whether the market is being overly complacent about decoupling between the U.S. and China to the American exceptions of trade, big tech. So, I do think this is very I would administration. This is part of the enthusiasm about second countries in particular. So I'm not sure just because crosshairs is going. This is a real race for AI. I think it's interesting to hear that China is, they need our tech because it does seem kind of the argument that they did. Necessarily NASDAQ is up by 26%. Is that an excuse to sell it, given the overhang of some of these issues? So this speaks to the NASDAQ, this speaks to the overall S&P, because obviously there's a lot of exposure to these tech and Mag 7 companies. Mag 7 beat earnings by almost 60% this quarter. There was zero expectation for that. That's the best beat rate in 2 years. So that's just, I think before I was on last, they had this is the consensus trade of the past 2 years. They were still really behind it. And now it's working again. And I just don't think I think it should be through, I don't think differentiation between all of them. At the forefront of not only, the fastest EPS growth, but they're driving the margin expansion. And it's going to move beyond them to the rest of the market in the US. So I just don't think one sector is going to benefit when it goes to the rest of the market.
I mean, I hate to keep harping on financials, but I do think, financials really do stand out as like one of those, sectors that has this very high expense, but like that can be kind of automated.
The Anthropic report that basically all these entry level positions, especially at banks and financial firms, are basically going to be out the window because we're just going to replace them with AI.
I was wondering, thinking about like what Neil was saying earlier today, like, is that spike in like continued unemployment claims is that related and concentrated in the I think that's, and the story is that this is happening underneath the surface and like there isn't a huge amount of, focus on it at the moment, but it's gonna come to fruition over the next, it sounds like it's
So just to finish up on the idea of how you, as an investor, handle all of the trade headlines and sort of roulette that we keep getting. Do you have indexes? Do you have ChatGPT screens to see what exactly the words are that might actually make a difference, or do you just ignore it?
the trade headlines. We do have an internal ChatGPT or but we're focused on fundamentals. Like, yes, we pay attention to what's being said and a lot of these things, particularly we didn't even talk about this, the reconciliation bill, like what that means from a positive standpoint. But for the most part, like we're fundamental investors. We're going to be focusing on what's happening with the companies and really what they're saying more so than like and how they're navigating this environment than we aren't necessarily. And again, what can happen from a policy standpoint can change any minute. So that's more difficult.
Avi Yoder of JP Morgan, thank you so much for you. So Avi Yoder of JP Morgan Global Wealth Management at a time where increasingly that's what we keep hearing, that if you would just get a different headline every day and sometimes within hours, look elsewhere. But nothing's changed because the direction of travel is consistent. I love what Neil Dunn said yesterday in his note. Tariffs are a dial, not an off switch. And if you think the judiciary gets to be the one to turn the knob, see, no. The administration, they are going to pursue it. It just might be bumps and detours of how exactly they pursue it. Meanwhile, we're going to be talking about the economic data and what that is telling us about what's actually happening on the ground. Coming up, Dana Peterson of the Conference Board on falling CEO confidence. Watch that, because that I think a lot of people are watching to understand what are executives doing with this, how much are they putting expenditure plans, and what are their hiring plans like, not just ChatGPT, but beyond. This is
Your time, guys. David, let me start with you though, because the trade methods, right? I talked about you as a bad guy, you get the rule in your favor. That's the support. So that's
well, that's out of the steps and balances system. It said that there is a final decision. It's going to be a decision that's fixed, and that I can actually plan my business forward with. These last 2 months, it got much longer than 2 months into the day. So up, down, sideways, I've been petrified. I haven't been able to plan my business. The tariffs get too high, I have to start producing my little science kits in America. Thinking about getting like Europe to build my kits and maybe sell my products to Europeans. So yeah, it's definitely a lot of emotions. I'm definitely in the short term factor, but given the motion, given all these constant comments I've been seeing in the hours, I definitely found some optimistic about being able to make my science kits in America. So what you just said there, just to emphasize, saying that it's outside Europe. That he was interested in Europe and south of Europe. So an American probably is moved to Europe and south of Europe, and that is a lot. And I think anybody would agree that's a lot. The administration that they got workers. But hey, then they have to put these tariffs on anyway. The White House maps the critical ways to do it, the critical places, we take a couple of times to put people place and these procedures are very good. So, what was that mean? And I knew that 55 is the part of the base, right? And so the secretary says, watch it, and they'll solve, but are they saying something once again?
Cessation of sanctions against
easily sort of define systems, so the number of guardrails may be set just yet. The numbers will be quite substantial with the minimum authority. And the analysis of the
US majority.
it's like in New York, continue your agenda. Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. They'll show you what's happening in ETFs like no one else. ETF IQ only on Bloomberg.
So Riley, can I?
Africa, region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Got back a lot of the losses from earlier this morning. Let's wait for it, see if we can add to the gains that we've seen already this month. Basically flat across the board, S&P futures and NASDAQ futures down less than 0.1%. So what this is telling you is that the volatility in trade headlines is not making a dent when it comes to traders that have seen it all and are kind of done listening and being whipsawed, at least for the moment. 2 hours away from the cash open. Here are your Sandy Berger, Danny.
Hey, Lisa, Regeneron, finally in the pre-market trade, it had experimented with lung disease drug that was partnered with Sanofi to do. It ran some tests, some trials on that. It shows that some of them showed improvement, some of them didn't, and that's going to set them back. They say they're still analyzing the data, but those shares have market cap reporting earnings yesterday, talking about a $300 million hit that they're going to see because of tariffs. It did say it could offset half that, but figure itself a surprise to markets. They're seeing shares down really large extent, down 15%. It did have some solid results when it came to Gap and Old Navy brands, but some of their other brands did see sales fall. Now, where consumers are spending is makeup. Ulta, the makeup chain, really strong results. It beat on basically all of its metrics. It lifted its profit for the entirety of the year. Those shares up 8.2%. I wrote down this quote from the CEO because I loved it so much. The CEO said in the earnings, many customers are leaning into the beauty industry as a comfort and escape from the stress of macro uncertainty. So Lisa, worried about tariffs, I guess make yourself feel better and go buy a blush.
Get yourself beautiful. Danny, thank you so much. I really appreciate it. We said that during the pandemic, although people said it was because of Zoom and the fact that people wanted to look good, but it seems to be the trend. It just won't die.
In Europe, I used to go interview the L'Oreal CEO ago, and he'd talk about the lipstick effect. In case of a downturn or nervousness and anxiety, you go out, you take yourself something small, affordable. Lipstick.
Yeah, my grandmother, whenever she was stressed out, hairspray. Honored this morning, President Trump's tariff agenda getting a legal reprieve. A federal appeals court granting a temporary stay from rulings threatening to throw out the bulk of his Liberation Day tariffs. How much have we actually learned? A lot of noise, and we actually learned a lot because the tariffs are staying, and the question mark is, will they stay under IEEPA? The administration had to find different avenues to get to the same end. The Wall Street Journal's page this morning talks about that as twofold. They likely use Section 122, which was to Peter Navarro yesterday about. And he said, basically, nothing's changed. The administration is aware of this, and we could. He basically agreed to the fact that they could use this as a bridge to then get to using other trade provisions, whether it's 232, countries, or legally. It's the time is of the essence. There is a report in the administration trying to get some of these tariffs and trade negotiations done in time for the midterms. Positive. The self-imposed deadline. It's everyone, and then you're putting China to the side. It's going to be really Treasury Secretary. Everyone else, they want to get to July 9th. So I think this is really just noise because it comes to June and strikes all of us down
have this advanced decision. July 9th, they could still use section 122 and have a minimum, maximum 15% tariff on everyone for 170 days while they figure out these trade deals. I mean, talk about China. Treasury Secretary Scott Bessent saying trade talks with China are quote a bit stalled. Bessent added that President Trump may need to hold a phone call with Chinese President Xi Jinping to get negotiations back on track. What I find interesting is I was in the Oval Office of the President in Geneva talks, and I asked about this, and he said once again to get a phone with Xi Jinping. So it's interesting that call has not happened yet. For that to happen, there was likely a hint of a potential grand deal that these two countries could have. To Mike Shepard's point, it's not Trader Harris that's holding this story back, and I agree with him. It's the fact that the U.S. is coming out with sort of aggressive stance on chips, potentially jet engines they want to revoke going to China. And this was this reason they were looking at this for Chinese students. This is adding to a lot more animosity after that Daytona. It's waiting for us to talk about who's waiting by the first call. Understand the president at the press conference alongside the first place departure from his role in the administration leading the DOGE on Truth Social. This is his last day, but not really, because he will always give us helping all the way. There were questions about DOGE, questions about whether this is just a goodbye party. What is the purpose of this? Which I agree with you. I do think it's a little bit of a goodbye party. Say the president talking about there, so these really happened last night. There, the fact that the way of thinking is a cost trying to efficient, even though Elon Musk used an operation on screen and talking about obviously for price now. This is those that Scott Bessent was talking about the Treasury Secretary making them more efficient. I really want to see that. So Elon Musk, of course, really had a certain amount of days. He was a special government. But I am distance in place. How they discuss cost cutting measures and what the future looks like. Had a lot of conflicting news about just how much it's happening. Many times the owner was saying a lot of investors watching what company CEOs have to say. The largest according to the survey, the majority of CEOs are bracing for a recession in the next 12 to 18 months. Thank you so much for being with us. I want to talk about how surprised you were to see this data. You have that sentiment data about consumers has been taking the results in terms of earnings for a lot of companies.
Well, I wasn't terribly surprised. Certainly, since the beginning of the year, there's been a lot of volatility coming out of Washington in terms of policies around trade, around regulation and spending. And I think it just really suits many CEOs, especially those who are very dependent on trade for their businesses. And so we did notice that with responses out to talk between China and the US on trade, and those afterwards really mattered. They were still
the idea of how to read this, how much forward indicator these surveys traditionally have been, how much confidence index really is something of the measure of change in economic trajectory versus noise you've seen a lot of confidence surveys.
Since we've been doing this for 50 years, when the measure drops below 50, which is, that means it's pessimism as opposed to optimism, it's done a pretty good job of signaling recession. Now, we look at versus what it did back in 2022, late 2022, late 2023. We saw similar numbers. There was going to be a short and shallow recession. We didn't get a short and shallow recession because consumers continued to work. And the reason why is because companies didn't let them go. Companies cut elsewhere. And we see that, certainly this time around, a lot of noise, a lot of volatility. It really spooked a lot of CEOs. We still hear a lot of CEOs raise prices, because these tariffs are going to affect us. We haven't heard much about the state of still in all, if we do see these tariffs stay and even intensify with some of these other investigations, you may see some unemployment rates rise.
Well, I think what's interesting about the survey that CEOs anticipate no change at all in the size of the workforce for the next 12 months. So doesn't that show that they can weather the storm?
I think so. But we also have to remember that there's labor shortage going on. You still have to get thousands of people hiring every day, and you have younger workers, but they have less experience. So I think that that's story there. So there were companies cut other places, cut investment, immediate investment, vendors, workers, and raise prices, but they're not going to let go of the workers.
We have mixed reviews when it comes to corporate America in terms of how they're dealing with the tariffs. So yesterday they're supposed to produce mattresses and pillows, and they seem to be weathering this. On the other hand, they're anticipating as much as $300 million in tariff impact. But I want to get a sense from you. Do you think corporate America is using tariffs sometimes as an excuse for other issues in their business?
That's always possible, but I would say most people, these companies, CEOs understand the tariffs are. The tariffs are a tax on their imports, and they're not going to absorb those costs. So they just keep passing it down to the wholesaler, to the retailer, and ultimately the customer. And so, retailers that sell clothing, clothing is not being in the US. So it makes absolute sense that people are nervous versus maybe other types of entities that source things from the United States. So I think that some companies may use it as an excuse, but in general, this is a real thing. This is a real risk for many companies, and they have to figure out whether this. A lot of this is going to be to raise prices.
Yeah, I can consider this tariffs and companies that companies that spending mergers, acquisitions, assets, how much they price with that, and of course, sort of sustained as a result of some policy uncertainty.
Sure, at the beginning of the year, I think a lot of companies were anticipating deregulation, maybe some tax corporations, and the risk of flipped. If we were less worried about that, those kinds of benefits faded away with the trade wars. And we did notice that there was a dip in the number of CEOs saying that they were going to increase their CapEx investments. I think many companies are on pause and waiting to see what's going to happen. And unless you have some kind of long-term budget where the politics doesn't matter as much, I think a lot of companies are going to be able to see probably use it about data destruction. I think we're actually going to see some weakness most recent data, but certainly in the third quarter. And that's going to be very gnarly for many CEOs and many companies.
Conference board, thank you so much for being with us. And right now, we are waiting in less than an hour time. Personal income, personal spending, real personal spending, which will be interesting, as well as for PCE. Right now, let's get you an update on stories elsewhere.
Sourcing relevant use items and examining potential price changes on an item by item basis. Within 20% before this year. Toyota will start producing 2 American-made all-electric models next year, adding to the company's existing EV lineup. The Japanese automaker wants to have a total of 7 EVs on display in its U.S. dealerships by 2027. The new battery-powered cars will help fulfill Toyota's pledge to offer an electrified option for every model it makes globally by this year. Partnering with JP Morgan, Goldman Sachs, and 3 other banks to trade private credit, syndicate investment grade debt. Sources telling us that the partnership will allow funding to originate larger loans faster and support its efforts to reach individual clients. Apollo and other fund managers see the $1.7 trillion private credit market is still in the early stages of explosive growth. Thank
you so much, Danny. Up next is Siggy with Planet.
The tariffs remain in place. The floor. Just go do it another way. It helps us strategic options.
Mark Jordan, Chief of Staff to Vice President Mike Pence joins us next. Surveillance.
Starting for the Israeli diplomats as they left facilities. 6 minutes actually starts. Put it in the following steps. And we pull up possible programs that some developments in the city that we did here and the resiliencies and what we do to strength and create. So many people across the country, including the entry, so we had a picture of family
it's fascinating. So to transform India, I think that the time has come. They're not only raising glass ceilings, they are redefined. You know, whether it is in sport, whether it is in medicine, whether it's in creative arts, we are everywhere. And so much positive energy comes back to me when I'm talking to Indians. And I just say, I want to settle girls and boys. I don't want to discriminate. For now, in school going age, imagine once education, sports, we empower them. What a difference they would make not only to India but to the planet and the world. And the world needs it now. Thank you for before.
Something they do. And why is this together? And you hear here's some of the people going down. Just says regular presentation of the following word summary of the elections. This is the best you can. How many of the there's mental words, and if you want to go to the sound room, you play giant for all of us
Where the action starts in Sydney. Is Asia trade weekdays only. You up to the minute, whenever and wherever it happens. I'm Stephen Engel at Sydney.
Yeah.
Some sort of into actual territory as that essentially inflation data as well as personal spending this morning speaking and
yes, this is wrong.
just now from everyone. A past.
Potentially be these tariffs are allowed to go through.
Yeah, well, it's the original Wolverine tool inside. It's staying here. Most people say it's here projections of the race cards and risk. I think it's the Yale. They're focused for decades saying they're stable. The original so getting ready for tariffs is a sense of power that makes the administration and of course that's speed. Congress say right now, of course, FC has the ideas that that's going right. It's very much strategy. Course, these terms are very significant for the administration.
The current, thank you so much for that short form. White House Legislative Director and former Chief of Staff to Vice President since now. I'm curious, Mark, from your perspective, how do you frame the policies of the policies of Program 1.0, which you're intimately involved with?
I think that the lesson in that is as it comes to make administration sure tariffs on steel predominantly rally the globe against China, which out of the administration which is wanted to try to pull over on the United States and basically tariffs for national security reasons against China, claiming it doesn't trade, claiming it doesn't today was 100. That's not a message you hear from the administration. What they're saying is we're going to assess tariffs to try to get manufacturing.
The administration is taking too much of leverage.
I think that this is what the positions are as consistent. There's no sharing this when it comes to trade. This is important. And I think that you're going to continue to see emissions out on the back. And I think this is enough. Congress taxes. And so IEPA. You see the administration saying, hey, we'll do it under 301 until Portugal levels so they're going to continue to push it.
Do you view these trade talks and negotiations as trade? Also about that these deals companies in America. We see a number of companies trying to basically cozy up to the United States and countries how much they're willing to build.
So I think that the president deserves credit. In many cases, this will probably be words that those countries know if they can get credit for relief for terrorists. So I think it's two. In some cases, I think it's motivation. Nutrition.
Legislative director under Trump's first administration. For those that are not used to Washington speak, you basically shepherded through the first Trump tax plan, TCJA. We're going to see the extension of that potentially. We're expecting the Senate to change its bills and to over the House.
I think you'll see some. And I think the reality is 2015 to 2014 doesn't have a lot of origination. There's some see if there's things. So I think you'll see some negotiation within the debt.
How serious do you think this administration is about? I don't think Mar-a-Lago Accord was many provisions in that. And I'm talking in particular in the legislation. There's one section that has a lot of attention on bond markets in particular. It's section 899, which would tax certain investments in the United States foreign investors tied to particular countries that have flat taxes, that tax some of the technology coming from the US. What do you make of that?
Probably. There's also tax tips. Those actually pay taxes. I think we can look at some things like reducing deduction or adding a deduction for automobiles made in America. There's a lot of these initiatives to advance the narrative. I don't think it's
you know how the sausage is made, and you talked about how when you were there, it was much more of a conservative fiscal approach. This is much more populist. I'm not about that on Capitol Hill right now. Republicans who are more traditionally conservative, and those who are more populist, and then how much that is being divided by the overlay of just Trump. What do you make of that?
So even they express traditionally, they advocate publicly independent allegiance with the president.
To have you. Thank you so much for what you said. I'm sure the former Chief of Staff and Vice President Mike Pence. Thank you so much. BNP Paribas. Distortion from consumers and still still have very Mexico. The wage are much more China. So why US companies not take advantage of that?
This structural cost advantage has been adopted in Mexico to continue to contribute to the growth for US as well. The value chains, the supply chains are so integrated that Mexico has to play or continue in the further development of the US. And US is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for me is a source of resiliency, earnings, and it generates a comprehensive diversification that we have footprint. There's another topic that is very important. Sometimes we don't focus a lot about why we're so convinced that Mexico is going to continue to develop just the leverage in the country. Because the leverage in the country is only 33%. And when you see Mexico grow in Mexico, structurally speaking, the leverage is a little bit, just a little bit of growth in the leverage is going to be able to support that increase in Mexico. So that's why we're structurally positive for Mexico.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate policies from Washington into actionable ideas.
It's the morning call in Thatcher. economy.
Separating the signals from the noise.
But what about the diagnosis? The diagnosis at the end is worry so place. How do you identify it? Why do you worry so much about that medical betterment? Because if you can't grow,
GDP and federal deficit, and that's not good for the economy. This is really critical, and I think what's underappreciated is who the inputs are to get to the growth number. And so we talked a little bit about productivity. I hope that we can continue to produce at 2% indefinitely on productivity. I think that would be great. But you gotta make sure you have the other levers in place, I think, to buoy that. So if you look back over the last several years, we've had 8 million immigrants come into this country in the last 4 years. And that's helped growth. And by the way, that's deflationary.